Hello guys, as you can see this is the 2nd of February 2014 and we're looking at let's say a continuation of our previous analysis that we made here on fairbinaryoptions.com. We are preparing, this is still Sunday, but we are preparing for the next week to come, and this is again Great Britain pound US dollar, or cable as it is being also called, the 1 hour chart. And this previous move to the upside, we would still say it is a contracting triangle or a leg of a contracting triangle that ended with a lower degree contracting triangle. So the D wave actually to end around this level. Now if the D wave ended here, then the previous C wave should end it to these lows here, into this area. So what I would like to do now is to mark a bit the end of the previous wave. So this is the area for the C wave of that degree. This is the area for the D wave to end of this degree, D wave blue, like this. And of course, this should be the C wave blue. So on the left side of the chart we have A, B, C, D with the A, B, C, D, E. Now, what should be the labeling before this D wave? Well, this can only be an X wave of a lower degree. The move to the upside is definitely a corrective one because it goes and it channels too well. All the corrections of a lower degree are almost the same, and therefore we would say that this one here is another A, B, C, X, and then another A, B, C, D, E with the end by the time that this contracting triangle of a lower degree ends around here. Now what to look for next? Well, we are looking for an E wave. Now, the E wave is the most complex corrective wave within the contracting triangle that we are looking for. And the E wave actually can retrace only 20-something% of the previous D wave, 38.2, 50%, 61.8. It doesn't have limitations for that retracement, and therefore the logical thing to do is to take a Fibonacci retracement from the highs in the previous D wave and to go, okay, not like this, the other way around, and to go for, so from the lows of the D wave to the highs of the D wave, and then to look for the retracement level. It is mandatory for minimum 3 waves of a contracting triangle to retrace more than 50% level when compared with the previous wave, and therefore you can see here this is 50%, this is 50% here. It is also coming in the E wave. Now, the E wave actually can be anything. It can even be a contracting triangle of a lower degree. So in the end, the E wave, let me take a polyline from here. The E wave blue can be A, B, C, D, E, and then price to break to the upside. That would be one option. Let me make it with blue, like this, and let's make it like this, so that we know that this is the scenario. And in this case, our E wave should end around here. The E wave also should be a corrective wave, so it might be wave A here, and then to have an A, B, C for the B wave, and then another C wave to the downside. In that case would be A, B, C, and most likely will relate, taking another polyline, most likely will relate with A and the B, like this, and this, the C to the downside, to come with the same length like this one. So something like this to be the E wave out of this degree. This would be, of course, another scenario. So let's make this one like this, and let's change the stroke like this, and this would be again another possible way for the E wave. What would be the outcome? Well, again, in this case the outcome would be the upside as well. What I'm trying to say here is that going into next week, trading for the Great Britain pound US dollar, even though price action ended the last Friday or the first the 31st of January with a bearish mode, we are kind of looking for a bullish outcome based on this Great Britain pound US dollar chart or 1 hour chart. And I would like to buy call options on this one by the time this trend line from here to here is going to be broken. So mark this trend line, look at it, and keep in mind that if this one breaks to the upside, then we would like to buy call options with end of week expiration date. If this is going to break on Monday, we'll buy Monday end of week expiration date. If this is going to break on Tuesday or Wednesday or Thursday, it doesn't matter. We are buying call options with end of week expiration date, basically next Friday 21 GMT, as this is the logical thing to do by the time this trend line breaks, because the structure to the downside seems to be corrected. It remains to be seen if the markets are going to agree with our analysis here, but this is buying call options by the time price breaks the gray line there with end of week expiration date. Again, it doesn't matter the moment of time the price breaks that trend line. It is important to be broken, and therefore we know what to do. Thank you very much for being here. This is our analysis on fairbinaryoptions.com, and all these analyses again are possible due to the help of our sponsor, of course, Lena.